Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, the 1st of February, 2021, getting on into the evening, about 7 at night. What a day. GME down 100. AMC was up. I rarely cover stocks in this. I'll let the other pros do that. I'll cover the SPDRs and ETFs, but I will show you an AMC chart today. And that tells me that we should talk a little bit about what's going on. You're seeing that the players have backed away. I don't know if they'll stay backed away, but they've backed away on GME. You've also seen that Robinhood keeps raising more capital. Let me explain capital requirements. Your clearing firm, your brokerage firm, if they self-clear, it means they're executing the trades, they're people on their behalf, and they're doing all the paperwork internally, not a third-party broker that they're going to for the clearing. When they do that, that means that they're holding your money, and as such, there are capital requirements. It's a ratio as to how much money for their client base versus their own unencumbered capital. Do we understand that? It's got to be their capital. So let's assume that they had $1 billion, and then, look, whatever happens, GME goes dramatically higher, AMC goes from $2 to $13. Well, the clients are making money. I'm not saying every client in there is making money, but I am saying that if they acted in mass, and I don't know if they did, the capital, the amount that they made has gone up, but so has the capital requirement gone up. That is why you are seeing Robinhood running around getting $3.5 billion infusion. They're looking for more money now. Their own success is also causing a problem for them with capital. So they've got to solve that situation, and they will. If they don't, as fast as we say, oh boy, the SEC comes in, closes them, freezes everything, moves those accounts to brokers that have the capital, game over. That's the last thing they want. It's not a sign that something is wrong at this point at Robinhood. Their own success is causing them to get capital requirements. As they're finding that capital, they're also allowing traders. It was 50 block stocks, then today it was 8. I don't know how many it'll be tomorrow, but they're now allowing more shares to be bought and sold. And I know that's a big argument. How could they restrict me, blah, blah. If they don't have the capital, and I'm certainly not part of their board or anything, so I don't know. I'm an outsider looking in, but I owned a stock firm. It is my guess that that is exactly what is going on. A mixture of capital, number one, risk that they have to figure out, what do I do if this thing keeps going? If it drops down, where are we? They probably wanted the pullback, and it gives them more of a capital cushion. But if different markets take off, what do you do? Such as silver, which took off. Look at silver today, up $2. I don't think that these Reddit traders understand the futures market. It's going to be much more difficult to run that type of market than it is an AMC and a GME. Simply put, we have the CFTC, we have the exchanges where we don't have a 50% rule in margin. The exchanges set whatever number they're comfortable with. Clearing firms in futures cannot be under the exchange, but they can be any number they want over it, and they go there. Today, I saw one major clearing firm take the silver margin up 100% effective for today, February 2nd. So if you think that doesn't occur, I've been around this 51 years. It occurs. They'll do something that they have to figure out in the SEC for the stock firms, along with this short open interest that is greater than the float issue. But that's another story. Now, for those of you new to this, when we take a look, we're going to look at daily charts on all this. I'll start with PAVE because I believe that sooner rather than later, infrastructure is going to become a game that we want to be talking about. First, the Biden administration, which had had a meeting today with 10 Republican senators, has to figure a way out for COVID relief. They can get certain portions of it passed, not all of their $1.9 billion deal with the reconciliation vote, but that reconciliation also makes enemies of the Republicans. They want to get something done friendly. If they can get that done, then I think a common theme from Janet Yellen down, our Treasury Secretary, is more infrastructure. So what you've done is you've pulled back in. This is called an island formation. You have a gap here, and a gap here. When the market fills this gap, that island is gone. Until then, it is a bearish formation. So until that gets filled, I think the chartists will be looking at that in a bearish way. These are called swing lines, this brown line. This is the same chart, I just put the swing line under it, and I moved it down a little. A swing line is an indicator I wrote that looks 5 different things from the previous day. Is today a higher high, a lower low day, one of the two, an outside day up, or an outside day down, one of the two, or an inside day. 5 things, and the indicator is drawn accordingly. I am looking for a pattern. In a downtrend, you are looking for a pattern of lower highs, lower lows, which you have here. To break that pattern, you've got to take out 2148. So the risk in being short the market on the swing line is not to get over 2148, you're at 2127. I next look at bias. I measure bias by where the market's at in relation to the 18-day average of closes. We have a downtrend by the swing line because the market's under the 18-day average. Even if you take out 2148 and break the downtrend, you don't start an uptrend because you're still underneath that 18-day average of closes. Got it? It's a filter. Next, I look to see Bollinger Bands. Bollinger Bands are a popular algorithm used around the markets looking for theoretical support and resistance zones. What is not theoretical is the market will not stay 5% more than under it or over that band. Got it? So when I see the market first hit it, that is a support point, a point that, assuming you're short the market, assuming the bias is down and you were in the market, that is the area to take some money off the table. And then you've got to figure out if the rest of your position, you want to jam a stop down or just call it a day there. Same thing happening on the upside as the market runs. And you will get times when you push out a narrow band, that is very typical, you will break out to the upside. We'll discuss that as they happen in these videos as they go on, and I teach you how to work with that or give you an overview. Most of what I do is really taught and really refined for you in my subscriber videos that I put out in the morning. In the slow stochastics, you're oversold. So I have an oversold condition that's hit a downside target, downside bias. I contend the pros are taking money off the table. That's my analysis. SMH, today's action turned the market bullish. You had been in a downtrend, lower highs, lower lows. I'm noticing this market did not want to get back to a lower Bollinger Band and hasn't since, very frankly, November. That's important. So if you're looking for it to hit it again, why? Is there something more bearish? No. You have, if anything, a semiconductor shortage around the country. So that's something that I pay attention to. So what do I use in place of Bollinger Bands? As you know, in the morning subscriber video, if you are a subscriber, I use window envelopes then, and they are standard deviation parallels to the 18-day average. I won't discuss them here. Too many lines on the chart for the average person. Not for my subscribers, because most take the charting course, and all of a sudden it all makes a lot of sense to them. May not agree with the analysis, but it'll make sense. So if you get back over this number, now what happens? Well, you broke the downtrend. You closed over 234.98. The settlement today, 235.49. I think the pros went long this market. I think their stop will be under the lows of Friday. Their objective initially, the upper Bollinger Band. Why that number, not a window envelope? Well, you keep hitting that number. You're not having a problem with it. Window envelopes, yeah. Would I be teaching you to peel some money off? I certainly would, but the bigger objective's up there because it has a tendency to go there. In the industrial sector, you've been in a bearish trend. Now, I know that a lot of people didn't believe me when I saw this unfolding on my dailies, my daily subscriber videos, but now you've hit your profit objective. You're approaching a long-term support line, the 100-day moving average of closes as well, and you're very oversold. I think the pros are coming out of that market. I think today was the day to come out. If anybody was short in the energy sector, I think the objective was no more. than the lower Bollinger Band, which was hit today. I don't know how tomorrow's API number, the EIA numbers are going to come out. Frankly, don't care. As a chartist, throw the name off the chart. The first time you hit a Bollinger Band, the high percentage is to take money off the table. You want to jam your stop down, fine, but you're oversold. You're not saying on the slow stochastic, oh, I've locked in a bear trend and I'm going to keep going. QQQ. The market keeps fighting right here at this 18-day average. Like SMH, notice, this market doesn't like to go down to that lower Bollinger Band. It too, the last time it visited it was November. So while you get breaks in the market, they're shallow. They're not deep breaks, something to pay attention to. What is the market now? Swing line down, bias up. I think the pros, if they went short at 318.81, they probably will not let it get over 326.42 while they hold those shorts. I just don't like anything on the side of that market. The emerging markets, this was on Friday, a cover short day. And I know you're going to say, Ira, look at how much money you left on the table, because that inevitably happens. And I go, yeah, I guess so, because I would have told you to cover at the first challenge of the Bollinger Band, and it certainly broke down more. Now I look like a hero. You figure. But I'll play the percentage trades when I teach you in my charting course and in my morning videos, because I specifically say I want you to do this and that. By the way, I put out those videos, I record them, start recording at 8:40, they're out right after 9 o'clock typically. Could be 9:30, 9:20, but they're out right after that. Momentum turning up sharply in gold. You've not in a trend. You got a higher high, lower low. That all happened, by the way, on Friday and here. If you take a look right here, the high of this is 74.96, right? 174.96. You come up on this day to 174.73. The next day, 175.16. And I know you're going to tell me, you got stopped out. Look what the market did. I'm going to argue that I have been saying that a value moving average is the 200-day, and I think the pros are nibbling in that area, and this is today's action. That does not mean I'm bullish, but I'm respecting that 200-day average. Gold miners are telling you not to be short anymore. Now, I just read a report, and I'm telling you it's 7:05 or so, read it 10 minutes ago, where Citibank is saying that the gold miners are holding back on gold price valuations. They're prepared for a decline in the market. That's what their opinion is, of as much as 30%. And in these stocks, that they've got that much built into them because they do believe they're going up later in the year. I don't know that, but what I do know is the market's no longer in a downtrend. AMC, I rarely show you an individual stock, but it had me chuckling. You know, I'm a moviegoer too. I love them. This was down to $2. I owned a movie theater. It was another one of my crazy investments while I was a futures broker. I never made a penny in it. I hate that. But to me, and I'm certainly not in it any longer, but I've tried so many things. If you don't swing the bat, you don't get to first base or a home run, right? $2, all of a sudden 20. That's the Reddit phenomena. Do you stay long over an upper Bollinger Band? No. Only 5% of the time. So I'm watching this, and you know, people were writing me, and I'm going, you do it, you play that game. I know it's all the emotion of the day. Watch out. FXE, this is the euro currency. I'm looking for support against this Bollinger Band, see the market down. I think the bigger trend in time is to the upside in the euro. We've got to get through releasing all this COVID vaccine. We have another variant coming. It weighs on the market. I get it, but I think the bigger picture is going to be supportive to the euro against the dollar, because we're going to keep interest rates low for a very long time, and they're already negative. It's easy to get back to zero or above. That'll give those a pop when and if it happens. What have I been telling traders? You're either short or you're not playing. That's what I've been telling. Certainly the profit objective here, I wouldn't want to see this market over the 114.04 level. You hear me keep talking about my ideas in the morning. Well, unfortunately, you don't get to talk to her. You get me. You don't get my photo, though, in that, which is probably a good thing early in the morning for all of us. But what it is I get a chance early in the morning to talk to you about what I'm seeing. Now, I've already read, by the time I'm doing this, I've already read what's going on in Europe, Asia, the U.S. Some reports have come out. I start recording this at 8:40. On Saturdays, I also do one with long-term weekly charts. During the week, they're the daily, and occasionally I'll throw in for you the other charts for it. In other words, a weekly chart here and there, the latest events. Now, these are some of the markets I cover. I cover 40 of them now. But what I want you to pay attention to is these are the sectors that I'm covering all through the market, and I do my darn best to give you a really solid picture of what I'm seeing. How do you sign up for it? It's simple. You go to our website, under the word research, it's there. It explains everything, and away you go. These are typically published every Monday through Friday, and then on Saturday or Sunday, I will publish a weekly one for you as well. Sometimes I'll even do an extra special videos for them. So you're getting approximately 100 videos a month, each 15 to 25 minutes long, for a tick in many markets. I'm Ira Epstein. You have a good day. Hope you sign up for it.